Welcome back, folks. I am John Najarian, and this is 3 at 3. 3 at 3, we bring you unusual option activity. We try to bring it to you every day at 3 p.m. Eastern Time or thereabouts. And unusual activity is what our algorithm has picked out as large buyers of calls, which would be bullish, or large buyers of puts, which would be bearish. And we follow in either direction. So we are data driven, folks. It's not just our opinion. We are breaking down the data and seeing where some very large institutional sized players have placed their bets. And if they're bullish, we follow them on the bullish side. And if they're bearish, well, you get the idea. Here was Evie, who was nice enough to send me a picture of me from the television. I guess she was watching when I was on CNBC this week with Dom Chu. And there, I think she has likely imposed Dom Chu in the background there. But nonetheless, always great to be on with at the Domino, which is Dominic Chu. And I appreciated the shout out, Evie. So I just wanted to say thank you. And now let's dive into a stock, which is near and dear to all of us, which I talked about yesterday, Starbucks. It's a very short-term trade, folks. So you hear me say it all the time. You've got to be nimble with short-term trades. How do I know it's short-term? Well, because they expire tomorrow. So you only had 2 days to be right in this trade. We were already right. I took off some 75% because I don't want to let it just hang out there. Do I think we could go to the upside tomorrow after the jobs report? Of course. But what if that jobs report delivers something we don't like and this vaporizes? That's why I've taken 75% of my profits off the table. You might say, well, it hasn't moved that much, Doc. What are you talking about? And I would say, well, my calls have indeed, moved pretty dramatically because the stock was $89.27 yesterday, traded up to $90.90. Take a look at that yellow arrow there. That is the high of the day. So against the backdrop of a relatively soft market, nervous ahead of the Fed or the employment data, I'd take that because, that's roughly $1.70 rally. And that pushed the calls that I had up into the high profit potential for more. Yeah, but I want to take and eat and feast on that rather than hope for more. So I have 25% out there still, and I'll be more than happy to see it go higher and say, boy, that discipline killed me, didn't it? All right. If you'd like to learn more about trading, in particular stock options and futures, We have coaches and mentors. We have distance learning, which means you can sit there on your laptop, your computer, your iPad, anywhere in the world and learn about trading options. You can also sign up for any of our subscription products at marketrebellion.com/get started. That's marketrebellion.com/get started. All right. First unusual of the day, put buying in KNX, which is Night Swift. Now, as that implies, and you see some big over-the-road trucks there, the combination of those two, Night and Swift transportation, well, with the stock right at 50, they're buying the 40 puts. That would be a big decline, so big that I think it takes us through the lows of the year. Does that mean that demand is being sapped by consumers and big companies might be cutting back on how much they need trucking transport right now? Maybe. Again, the jobs report might tell us a little bit more tomorrow, but this large put buyer of basically 1 million shares of stock short, that's a $50 million trade. I want to be on it. That's why I'm highlighting it for you. Rebel's Edge. This is our show that Pete and I do every day. Want to thank again Mark Lepresti for joining me today in Pete's stead, because Pete's down there in Florida cleaning up from the hurricane. And thoughts and prayers with Pete, with everybody impacted by this one. Pete was very lucky, folks. His house virtually intact. But there are a lot of folks that aren't so lucky, and Pete's down there helping out. So again, my salute to you, Pete. That's the kind of guy he is. And a very lucky guy indeed, because he's right on the ocean, folks. So it could have been just disastrous. And for many people in Florida, it was. So we do the Rebel's Edge every Monday, Tuesday, and Thursday at 1 p.m. Eastern time. Please join us. Again, today's episode was substituting for Pete, Mark Lepresti, business partner and friend of mine, does a lot of CNBC, Fox, as well as TD Ameritrade, and has a Sirius radio hit every week. All right, ABBV, more bearish put buying. Isn't there anybody bullish? Well, in ABBV, ABBV, they were buying the November 140 puts, basically at the money, because the stock was trading approximately 141. So somebody betting that between now and November, some bad news hits, takes the stock down. Don't know what that might be, but 350,000 shares of $140 stock, that's enough to get my interest. So that's why I put on a short spread in ABBV, ABBV. And finally, GameStop. Mark made a great point about this one on our show today, the Rebel's Edge. And he talked about, hey, consoles going the way of the dodo bird. A lot of these smart TVs are using that SaaS software as system as a software coming in on these computers rather than your TV these days is a computer, folks, rather than having a game console. I think that does work against these guys. They came in $26.25 is the strike price for these puts. The stock was right there, $26.20 December puts. So they're implying that GameStop may have sort of run out of rabbits to pull out of their hat. The last one, I think, was APE. We'll have to see how that plays out. But clearly somebody bets that this one goes lower in the short term, and I'm betting with them. All right, that's going to do it for us today, folks. Thank you. Pete will be back on Monday, as will I. And I will be back with 3 at 3, by the way, tomorrow. Please join us then. From down here in beautiful Cancun, Mexico, thank you and have a great day.